Good afternoon, everybody. Tom Fritz here, representing EFG Group LLC, as well as the International Futures Group. We're going to talk about fun and games today, courtesy of the USDA. Two major reports this morning came out, June 1st quarterly stocks as well as updated June acres. So let's start with quarterly stocks. The wheat market, quarterly stocks come in roughly 35 million bushels better than expected. So that means your carryout from last year is going to be higher than expected. Your carry-in for the coming year is going to be higher than expected. Looking at wheat acres come in 700,000 better than what the March intentions were. Now, I will tell you the majority of that comes out of spring wheat as well as durum wheat. Winter wheat acres were actually off 200,000. So on the surface, it really looked like a bearish report for wheat, and wheat had been one of our strongest markets here in the last couple of weeks. Well, the numbers come out, the wheat market stumbles for about 30 seconds and then just rockets higher. Why? I really can't tell you. I know the chatter has been poor quality, or the anticipation of poor quality in the soft red wheat sector since harvest has been so slow due to excessive moisture conditions in the Ohio Valley and points north. But, you know, I can't get on track with a lower quality issue. Lower quality, that just means more feed wheat. More feed wheat has to compete with corn. So I'm out in left field. I'm not sure what this wheat market's about other than massive speculative short covering. If you go back and look on a proportional basis, meaning looking at the open interest of wheat, comparing it to the open interest of corn, comparing it to the open interest of soybeans, the wheat market had the biggest concentration of speculative shorts. So yes, it's short covering, open interest has been coming down, so you know the shorts are on the run. When will it stop? I would think $6 Chicago futures is high enough. Well, we closed above that level today, so what will tomorrow bring us? But as I said, on the surface, it looks like the U.S. wheat crop is going to be a little bit bearish. But then again, you talk about world numbers, there's problems in Western Europe, there's problems in Canada, a little bit of problems in the former Soviet Union. But as far as I'm concerned, I think this wheat market's run its course. But then again, I thought that a couple of days ago. So, moving on to the corn market. More surprises there. Quarterly stocks come in 100 million bushels less than expected. So that means we have a lower carry-in to start. Then you go look at acres on corn. Corn acres down 300,000 from the March intentions. So here we have less acres, less carry-in, and we've got a big unknown developing in the eastern corn belt with the excessive moisture. You've seen in the last couple of weeks the condition of the corn crop on a national level coming down. So the end result was the corn market just zooming higher. When was the last time you saw the corn market limit up? Can't remember that, but we did see it limit up today. For what it's worth, daily trading ranges will expand to 45 cents tomorrow. So, how long will the corn market keep going higher? My guess is until we get a better handle on the corn yield of what it may be, get a break in the weather trends. You know, the already wet areas continue to get forecasts for above normal moisture. So, in the short term, the market's ripe for a correction, but longer term, higher prices may still be in the offering. Looking at soybeans, more surprises for us. Quarterly stocks on soybeans come in 35 million bushels less than what the trade was expecting. We can write that to better demand than what we've been seeing, or was last year's crop overstated? My idea is last year's crop was overstated. Why do I go that route? Well, I've seen the big demand, yet the USDA continues to tell us of a big old crop carryout. But you look at what the spreads have been doing in soybeans, soybean meal, that would, to me, suggest the crop was overstated. So adding to that, The acres that the USDA reports for soybeans, very little change from the March intentions. I think there was only a small increase of 40,000 bushels, acres. But that's not the big thing. The big thing is that the USDA has announced they will resurvey soybean planted acres for the state of Kansas, the state of Missouri, and the state of Arkansas. May not sound like a lot, but Missouri is the number 5 acreage producing state for soybeans. Kansas is the number 10 state. So what that means going forward is expect lower planted acres, lower harvested acres. Couple that with what's happening in the eastern corn belt with the yields coming down, the national yield coming down. Until we see a change in the weather patterns, looking forward ahead to lower acres, looks like higher prices remain in the offering for soybeans. Yes, the market's ripe for a correction, but I think until we get a better handle on what our national yield is going to be, the bias is for higher prices.